Hey everybody, this is Jose Blasco. We are starting our session right now with a little bit of delay today, actually, because of a little technical issue. But anyway, better late than never, isn't it? Anyway, so let's begin our session. Today is week 21, 2023. This is May 22nd, and we're going to do our market analysis before the US markets open in more or less 1 hour time, so we can prepare for the week ahead. My name is Jose Blasco. As always, or almost always, I'm the one preparing the week ahead with you guys. You can see my email address on the screen. You can also see on the left side of the screen that while I'm going to be using some live charts and things like that, you can also see that we have a newsletter that you could subscribe to very easily. And then it's sent to your inbox, and you can also visualize it and read it and enjoy it and use it using LinkedIn. Anyway, with all of this said, I would say the session is now introduced, and therefore let's begin. So one moment here. Here we go. So let's begin with our market analysis. We're going to start with the S&P 500. This is the first market that we're going to be analyzing. Here we go. This is the first market that we're going to be analyzing. Again, when you're looking at the newsletter, it talks here about before the bell in 3D. So I need to talk about what are the three dimensions, as well as I need to talk about the key markets that we are going to be analyzing today, which is what we do every week when we prepare for the week ahead. Those happen to be the most relevant markets in the world: largest equity index market, largest energy, largest metal, largest currency, and largest cryptocurrency. And by understanding those five, so certainly that's going to put us in a position where we understand what's happening out there, and ideally this together with your trading plan, your rules, your methods, etc., put you in a position of more efficiency, more profitability, less risk, more management of the risk, etc., etc. So we're going to look at those five markets in three dimensions. The first market is the S&P, and I need to talk about what are those three dimensions, because the three dimensions are going to be the climate, the UFOs, and the expected moves. Another way to say that is volatility. So let's begin with the climate, and let's look at the real-time chart. So this is the S&P 500 futures in a daily time frame. We can see here on the bottom part of the screen, we are using a tool called Auto Climate. This tool is providing us with a thick and blue colored dot, and that means that we are in an up climate, which is confirmed, and that means that statistically speaking, we have odds on our favor by going long, we have odds against us by going short. So being a buyer, it's what is suggested based on the statistical result of the application of this method. And we have a bit more detail here when it says one standard deviation on the way up arrow is 8, meaning that the statistical duration of an up climate, which have been running for 3 candles, current is 3 blue dots. So the statistical duration of these climates are 8 candles. We are in candle number 3. So in other words, seeing another up to 5 candles on the way up will not be surprising. Actually, statistics suggest that is more likely going to happen than the opposite. So this is the market condition that we have on the S&P. That's why we have a little bit of a sun. It's an up climate. The market is pointing to the upside. But of course, for this to work well, for this to have more odds of continuation, we also need to find out where the on-field orders, UFO on-field orders, where are the on-field orders to buy, as well as where are the on-field orders to sell. So sell orders are located at 4258. We are using our patented technology, auto UFOs, to do that. You can see the red UFO located up here at 4258 and above, and the buy on field orders green UFO located at 4039.5 and below. Now, the current price of the S&P is trading at 4208, which is, let's call it, in the middle of nowhere. So while we have a component of statistical advantage suggesting the market, this market is going to move higher, that's auto climate telling us that. While that's the case, we don't have any supporting green on-field orders anywhere close by. I would love this green UFO to be closer to price, so if the S&P tries to take a dive, very quickly the buy on field orders would kick in and this market would continue going higher. Now, given the fact that the buy on field orders are located so much lower in price, if in the end the statistical analysis of photoclimate was to fail, which sometimes happen, less often than not, but it could happen, well, then we may have to see the market have a very severe correction until we get to 39.5, which is where the next pile of significant buy on field orders is located at. If the market continues going higher, of course, we also need to respect 42.58 because being sell on field orders, remember UFO on field orders, being sell on field orders present at this price level, we would expect the sell orders to kick in at this price, and therefore, if the S&P rallies and reaches 42.58, from there we would expect a turn in price to the downside. Again, it may take 5 days to get there, which would line up very well with the statistical prediction of the climate. But again, it would be much better to have those green UFOs closer to price. So, in other words, another way to think about this market is that if you're in a trade and it's going, you are long, and the market has been moving your way, enjoy it. It's probably going to last longer. And when you get to the red, you may want to consider taking profits. That this red UFO could be a good price level to exit from your positions. Again, it depends on your trading plans, but just saying. But when it comes to entering positions, it's a bit tricky because while the climate is very well defined and statistics suggest it's going to go higher or is likely going to go higher, the fact is that we don't have a direct force. We call the UFOs direct forces. We don't have a direct force near to price, and therefore we may need to take a dive before this happens. So a little bit of a risky proposal to get into a trade now to the long side, but certainly if you are in a trade already, I guess you are enjoying it, and probably you will enjoy it for a little longer. Speed of movement in this case, which is our third dimension, the expected move. This is data. This is information that we extract from the options prices. We take the options prices and we, if I could oversimplify what we do, I would say that we reverse engineer the pricing models and we come up with, okay, so if this is the options price, then the expected move in a daily basis is 44 points, either up or down. The weekly move, it's 97 points, almost 98 points, either up or down. And the monthly move is almost 204 points, either up or down, given the fact of the current prices of options. If the expected moves were to be much larger, people would be buying options like the world is ending, and therefore the price of the options would be more, and therefore our reverse engineer calculation would imply, maybe 300 points a month instead of 200. If traders were expecting less of a move, they would pay less for the options, and therefore instead of 200, instead of 97, instead of 44, maybe we'd have half of that. So again, it's a very, very powerful way to evaluate what is expected without looking at the price charts, but instead looking at the options prices as well. Okay, good. So this is the first market that we have analyzed. So now you know a bit more about what to expect from the S&P. The next market we're going to analyze is crude oil. Here is crude oil. Here is the climate. Here are the UFOs. You got everything you need to know in front of you. Let's take a look at it in the newsletter. Here's the chart. This screenshot was taken earlier in the day. We are dealing with a down climate. You can see the little cloud there. Down climate on the chart real time. Red dot, thick color. By the way, Auto UFOs is free to use. So you can certainly go to our website and subscribe there. And then, our activations team will get it ready for you. And then you can do the same analysis by yourself for all markets, by the way, including intraday timeframes and everything else. So crude oil, we are talking about a daily climate which is pointing down. Statistical duration would be 6. This is candle number 1. So if it's going to fall, statistically speaking, it could be for a long time. But here is what happened. We got green on-field orders located at 64.84. So very likely what would happen is the same thing happened here. It went down, kissed the UFO, went back up. So if it goes down, odds are that we're going to have another reaction to the upside. So I would say in this case, while the statistical duration of the climate is 6, probably is not going to be 6 unless it takes a while for this market to go down. So sell on field orders located at 74.53. That's the red UFO up here, 74.53. Buy on field orders 69.84. That's where we are, 69.84, just a little below price. Expected moves, which is extracted from the prices of options on crude oil futures. So derivative of a derivative, options on futures. So we're talking about 1.62 points a day, 3.57 points a week, 7.43 points per month. Next market to be analyzed is gold. Gold has been a very powerful mover last week. So let's take a look. Let's take a look at gold, and let's understand better what to expect. So gold is in a down climate, which, by the way, we predicted last week in our market analysis, isn't it? I mean, I don't really appreciate the use of the word predicting for traders. Just using simple English language. The job of a trader is not to predict; it's just to apply a trading plan with odds in your favor and risk management in case you're wrong. Really, that's what we do. Predicting is not even needed. But anyway, just to use plain English for the ones of you that may be watching the session that are not traders yet. So, we kind of anticipated this to happen last week thanks to the tools that we use, in this case, auto climate, started to point red, and here we go. Gold had a significant drop, pretty significant to be honest. Now, statistical duration of the down climate for gold is 5. We've been falling already for 7 candles. I would say it's likely that we're going to fall a bit more, maybe a few more days until we get to 1942.5. This is where the buy on fielders are. Again, we are already in that case where I like to call late to the party. If you wanted to short gold, 7 is more than 5. So the duration of the climate is already more than what statistics suggest. So that market is probably getting tired of falling. And on top of that, the green on field orders are pretty close. So if you're going to make a profit, it's going to be very small compared to the risk that you take, and may even turn without getting to the green UFO, because new buy orders are entered in the market as the short sellers are taking profits, and to do that they have to buy, isn't it? So we'll see that real time on the chart. Just keep in mind that gold is in a down climate, but that climate may not be sustainable based on what I said. Buy on field orders located at 1942.5, sell on field orders located at 2028.3, which is the red UFO we have up there. That's the one we mentioned last week that created all this intense collapse in price. And of course, if gold was to reach 2022, guess what? The expectation would be to have gold go back down, isn't it? Now, at what speed? That's implied volatility extracted from options on gold futures, and that is 21 points a day, 47 points a week, 98 points per month. Again, this is speed of movement, so that's either up or down direction, and timing and all of that is given to you by the climate and the UFOs. Next market to analyze, the US dollar index. So let's take a look at the US dollar index. Here we go. So US dollar index in an up climate, okay, up climate, statistical duration of up climates for the dollar index is 5. We are currently talking about 7. So exactly the same as gold, okay, which, by the way, very likely gold is falling because the dollar is rallying. So again, there are very intense inverse correlation there happening in the prior few days. But notice the difference, though, is that while the dollar index is in an up climate and gold is in a down climate, which is the inverse correlation I just mentioned, well, what we can see is that the dollar is entering right now, as we speak, right now, exactly now, it's entering a green UFO, which is located at 102.96. Okay, 102.96. Sell on field orders 103.89. But my point, 103.89 is right there, red color. But my point is that because we're entering the green UFO, so that means that buy on field orders are entering the market as well now, which may help for the dollar to have another leg up until the red UFO, and then from there probably fall. But in other words, we may go from 102.98 to 103.89, so we may go up another one handle, which may imply another push down for gold that then reaches the green UFO we mentioned in the prior analysis. Expected move 0.47 points a day, 1.05 points a week, 2.18 points per month. That is the expectation. And the next market we are going to analyze is Bitcoin futures. We actually look at the Bitcoin that trades in the ICE exchange, that is the bakkt Bitcoin. And this particular market, it's currently showing us a down climate, 9 out of 6. So a little bit overextended. You would expect Bitcoin to come back higher, okay? Because while the climate is down, is a little bit on the unsustainable side, statistically speaking, based on auto climate. But the buy and field orders are a little lower, isn't it? 24,800, and the sell and field orders are a little higher, 27 plus, where the current price is 26,000 plus. So in other words, it may rally a bit and then fall, or it may have to fall until it comes to the green, and then we're gonna get the change of climate. That probably would be more the case, okay? Because the climate is already a bit exhausted to the downside. So we're gonna have to see what happens right now. Similar to the S&P, while the climate is defined, we are a bit in the middle of nowhere. So not really the right time to plan on a trade, certainly to observe it, and I'm pretty positive that throughout the week the opportunities will appear. Daily expected move 1,000, almost 200 points. Weekly 2,500 points more or less. Monthly move 4,400 points more or less, either up or down. Cool. So before we look at the economic report and we conclude the session, especially for the ones of you that are new to what we do, you probably appreciate this. We like to think about what we do by thinking of the 3 pillars that support what we do, which one is apps. So we are a trading technology company. It's all about AI these days. It's all about having an edge in the market. Computers do things better than humans. Processing market data definitely is done better by computers than humans, especially market data you don't see, because the candles is the up and the high, the low and the close, but there is so much more than that to be analyzed, isn't it? So our technology saves you time to apply that edge, and you have seen the UFOs, the autoclimate, all of those things. But of course, while our technology is very powerful, and let's say it's the best in the world, well, even if that was to be the case, if we don't teach you how to use it, then we are not really supporting you, isn't it? So that's why we have courses and coaching, where thanks to the courses, you will learn more about trading, more about the use of our technology. So now you have the knowledge, but then with the coaching, where we trade live together, we do this multiple times. Feel free to check our calendar on the website with the coaching sessions. So we certainly help you to develop that knowledge into a skill. And now you got the skill, you got the knowledge, you got the tools. That's it. Let's go kill it out there, isn't it? Of course, counting on you guys to apply yourself, to take it seriously, and for sure to add a little bit of effort from your end, because like everything in life, learning something implies commitment, isn't it? Anyway, so what's happening this week from an economic report point of view? Well, important day on Wednesday with FOMC minutes. Okay, that's always important, especially since some time ago. It's all about inflation, changes of interest rates. So anything that could be said could create volatility in the market. There are other news, which of course are important. New Zealand also with the monetary policy. But of course, just to be pragmatic, US is always the most relevant set of news that will impact the market the most in most of the cases. We also have GDP later in the week. We also have durable orders. And all of this has a lot to do with the health of the economy in the US, which goes hand in hand with whatever they're going to say in that FOMC minutes meeting on Wednesday. So this is, I would say, something to be watched. Before we conclude the session, I also wanted to share with you how proud we are of our book, Mystery to Mastery series, that reveals the reality of how the markets work. It's not a mystery, by the way. But of course, like everything else, we don't know what we don't know. So then if you don't trade yet, if you don't know how trading works, then it's a mystery. So the book will certainly help you. The book also comes with a free course. You can see that on the red sticker here, as well as free access to our technology during 3 months. And the book sells for as low as $3.88 if you buy it in ebook format, or $14.88 if you buy it as paperback. You can find it in so many different bookstores, either online or physical. And the book has been designated #1 new release in 3 categories in Amazon. So we are proud of the book, and we have very good comments from the readers and our clients that have been exposed to the book. Hopefully you will enjoy it too, and certainly I would recommend you to read it, assuming you like to read. Anyway, with all of this said, we are done for today's session. As always, it's a true pleasure to join you, a true pleasure to get together during this initial trading part of the week. And I wish you a good trading week ahead. And if you need anything from us, guys, so no need to say, shoot an email to us, go to the question page on our website. You will find a forum with questions and answers. Feel free to participate of everything we do. Many of the things we do are free. If you are new to what we do, just join us, take a look at what we do, and you will see it's quite powerful. You guys take care. See you soon. Trade well, and see you in the next one. Bye bye.